Hello guys, it's Kateryna Coskundeniz and April Palacios with Fairway Independent Mortgage. And today we will talk about two most popular loan programs. It's FHA and conventional loans, and April will explain us the difference and pros and cons about them. So let's listen.
Yep, so there is a big difference in when a client qualifies for an FHA loan versus a conventional loan. And as the client applies for their mortgage application, the mortgage lender would be exploring all of the options available. FHA is going to be most popular for lower credit scores or the need of a lower down payment, whereas conventional will be more popular for higher credit scores, people who have more access to funds to further benefit their mortgage payment by applying a larger down payment or purchasing a secondary or investment property. So the two products have very different rules. I have a list here of what the pros are for FHA. They allow the lower minimum down payment and the lower credit score. So FHA will require about 3.5% down. It is simply for primary purchases. So if you're going to look to have an investment property, FHA will not be your resource unless you were purchasing a multi-unit property. You're going to live in one of them as your primary and rent the other. That is acceptable. FHA is more lenient when it comes to the debt to income ratio. So you typically can have a higher debt ratio, which means that your income compared to what your credit report debt is and your new mortgage payment can actually be at a higher level than the conventional product typically allows. Usually when you have a lower credit score, your interest rate is going to be higher, but on the FHA product, it still ends up being better than conventional on the lower credit score borrowers. Now, FHA is backed by the federal government. So it's the FHA stands for the Federal Housing Administration. They make the rules and they give us the ability to qualify people to help them have affordable housing because it's simply for primary residences, right? So they give us some leeway and leniency on moving forward under certain circumstances. If they've had bankruptcies or foreclosures or something on their credit report, the time frame is a little bit less than conventional. For example, a bankruptcy or a foreclosure, you might be able to move forward in 2 to 3 years on FHA, whereas you might end up having to wait 7 years on conventional. So there's some big differences there in that regard. So as far as the property type goes, FHA is going to be looking for safe, sound, sanitary. They're looking to make sure that property does not have any major components that are going to go against those three things, whereas conventional is more lenient and they're mainly looking for any safety related items to be taken care of. So a live example there for you would be if a home has peeling paint on FHA, they would like that to be taken care of, whereas on conventional, not such a big deal. So the big differences in regards to that. Now, the mortgage insurance is something that is also a very good benefit. I'm going to flip over to the conventional side because conventional is going to be a little bit more friendly on the mortgage insurance. Mortgage insurance exists in a loan file when you're not putting 20% down. On the FHA loan, mortgage insurance is there even if you're putting 20% down. Whereas conventional will allow that mortgage insurance to completely go away if you are applying that 20% down payment up front. So that's one of the big benefits of conventional. If you have a lot of money to put down and you qualify for it, then conventional may be your better option. If you put less than 20% down on conventional, you will have mortgage insurance and it's risk-based driven. So your down payment, your property type, and your credit score is what's going to determine how much your mortgage insurance is, as well as how long it lasts. On FHA, the amount of mortgage insurance is on a 30-year mortgage is typically the same from a 580 credit score borrower to an 800 credit score borrower. Right? So the mortgage insurance on FHA is not as risk-based driven. It's more reliable as far as knowing what that looks like for you easily, whereas conventional, the more you put down, the better your mortgage insurance is. The higher your credit score, the better your mortgage insurance is. Conventional even gives you a discount on your mortgage insurance under certain circumstances. If you fall within a certain category of income underneath that, then you can get a discount for other options. And then also conventional can offer a discount on your mortgage insurance if there's more than one borrower on the loan. Whereas FHA, it doesn't matter. So the two major differences are going to be FHA, lower credit scores allowed, more lenient on the debt to income ratio, and typically a better interest rate option on the lower credit score borrower. Conventional's biggest pros are going to be if you're putting down 20%, there is no mortgage insurance. On conventional, if you have mortgage insurance, it will eventually eliminate. FHA is there for the term of the loan unless you are putting down more than 10%. So there's some big differences, and we'll have other videos that explain individually FHA, individually conventional, to give you a lot more insight. But just to kind of give you a quick synopsis of an FHA versus a conventional, those are some of the major talking points. And as a lender, we go through that with the client when we're talking to them, looking at their options, which one fits them best, and then explain the two so they can help make that decision themselves.
Thank you, April. Thank you. So follow us, and we will talk more about each program and other programs also.
Yeah.
Thank you, April.
You're welcome.
Thank you, guys.